Okay, so the question is support to resistance. Now, you all know what this is. You've probably seen this pattern play out a number of times, and you've probably always wondered, what is, why does it sometimes work? Why does it sometimes not work? Okay, in essence, what we're looking at is where a market creates a support area. In other words, it acts as a very significant support zone for the market. That then turns. In other words, the market holds above it, holds above it, holds above it. Eventually it breaks, and then it turns the support into new resistance, and then the market starts to use it as resistance. Okay, we call this support to resistance. Now, you would have seen this pattern play out a lot, and for the sake of avoiding, the cliche of, it's simple, you just sell it there and buy it there, I'm going to teach you rather how to identify when something is traditional, when something really is actual support and should become resistance. That way you're learning something from this rather than me just drawing silly graphics and, hoping you're going to learn something. So, the important question to ask is, what is support and resistance? Okay, and this is where most people go wrong. They don't understand what support and resistance is. Okay, support is not a line. Resistance is not a line. It's not just some line you put at a price and there's support there. Okay, support is where buyers, okay, listen carefully. So support is where buyers interact to hold the market. In other words, they are buying at a price point. Right? They're interacting, whether it's aggressive sellers, whether it's sellers that take profit the minute it gets to them, whether it's initiation. The point is that buyers interact at that price a number of times, multiple times, not once, not twice, multiple times. Okay? The more interaction, it's the rule of thumb, the more interaction you get at a support level, okay, the more important it becomes. Right? Why? Because of the psychology of once we break back down below that area. Now, note, it's not a line. Support and resistance is not a line. It's an interaction. Okay, it's buyers interacting at the support, sellers interacting at the resistance. Okay, now note, with this strategy, it always gets tested. In other words, once we break down and that support is now gone, it always gets tested. And this is the real key. So a lot of the time what happens is we panic in and we start to sell too aggressively in fear of missing the break. But the market always comes back. It always wants to test whether or not those sellers are now engaging where those buyers were previously engaging. And that's the real key, guys. If you want to become successful at this, you've got to be patient enough to let the market come back to you. Now, this is the most important part. The process, the auction process that takes place on that retest is vital. Remember what I said, support and resistance is not a line, it's an interaction. Okay, so we see a specific type of interaction at the support. Once we retest, we want to see only one kind of interaction. Okay, we call this a key auction reversal. Okay, and it's one of the 10 strategies dealt with in the footprint course, and I'm going to show you what it looks like right now. Okay, so let's get a chart up and let me show you what this looks like on the charts. Okay, so we're going back to the 5th of September in the WTI oil. Okay, so this is the oil market. You can see this is a 30-minute chart. All right, now to understand the support, we've got to go back and have a look at the 30th, the 31st, and the 4th of September. Now, if you're trading the WTI oil, right, I know a lot of the traders at Axia, including myself, we're all trading and playing for the breakdown below this 69.53 to 69.64, and that's why you can see these three brown lines. I'm going to extend that for you. Okay, so you can see a number of times, once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10, 11, 12. So 12 attempts at this area from 69.53 to 69.64. 12 attempts to try and break lower. The market then springboarded and we aggressively rallied again. Okay, so we can see this market has a significant area of support here. Not because I say so, not because of the lines, but because of the interaction that took place. Sometimes there was no real buying, but sellers couldn't initiate below this. Sometimes there was some very aggressive buying. Sometimes there was, very aggressive reversals. Sometimes there was nothing going on. The point is, buyers continue to interact in that area, continue to absorb in that area, continue to hold the market in that area. Now, the market finally breaks down. Now, the first key thing to understand is that when we do break below that area, we do need to see volatility, i.e. note the range expansion. So I'm going to open this up a little bit. Okay, so notice the candle, nice full-bodied candle. So there's the interaction. That's telling us there was an interaction finally below that area. Okay, a couple of longs being stopped out, but in essence it's telling us that support has now been broken. Okay, we can confirm that obviously with the volume. Okay, notice nothing going on in terms of volume, low volume, and suddenly a spike up to 23,000 contracts. All right, we then get the continuation. So the breakouts occurred. Now, this is where a lot of traders go wrong, is they try and sell here too aggressively. Don't. Let the market come back to you. So the market comes back. First time, it tests. Auctions off. Okay, nice strong auction reversal there. Note as we go in, we come out. So nice V-shaped type reversal. Right? Market comes in a second time. Again, a little bit more absorption. Right? This was obviously at 2 o'clock in the evening. So unlikely to see very strong auctioning there. Why? Because no one's trading. And then the real key one, and this is what sort of stood apart. Okay, we had a little bit of a rally again the next day. We rallied from 68.75 back into that area of support previously, and notice the auction reversal. Okay, very, very aggressively. And that's the real key, guys. That's telling us the sellers were engaging in that area, not once, not twice, but 3 times. Okay, so support has now turned to resistance. Let me show you what this looks like on a footprint chart. Okay, so this is obviously, like I said, this is the 5th of September, and we can see this is the breakout. Okay, so on the footprint, we can see the breakout. Note, and this is a term you'll learn in the footprint course, note the imbalance. Okay, so no buyer, just selling. Okay, market auctions lower, and a couple of hours later, note what happens. Okay, we come back to these 57s. I just want to get it to there. We come back to the 57s, 46 lots trades, and the market auctions off straight away. Okay. And I'm going to take you further on in the day and show you the key auction reversal. Now, this is the first strategy dealt with in the footprint course. I did show you guys one of these a week or two ago, but this is what it looks like. Okay, so the market comes up here. Notice the volume, very aggressive volume, large absorption taking place by the sellers. The sellers finally, they just take everything the buyers are willing to give, and once that buying stops, right, we get not just an outside 5-minute candle. Okay, each one of these is obviously a 5-minute rotation. We don't just get an outside 5-minute rotation. We then get, notice the delta, we then get the interaction. So sellers say, I'll take everything you can give to me, i.e. absorption at the top. And once the buyers stop, the sellers say, okay, now I'm going to actually start selling more because I need to get this order done. And that's the key. That's the key auction reversal there. We can see the market drifted off all the way. I mean, we had it was effectively the low to high of the range. We went from 69.57 all the way down to 68.70. So a good 80-90 tick reversal in a space of 20 minutes. Okay, and you can see the volume pick up, almost 50,000 contracts in 15 minutes. And the delta went from positive 1,200 to negative 6. Okay, now that's our key auction reversal right there, guys. And it tells us now this area of 69.57 to 69.64 has now turned into resistance. That is the key for oil. You need to keep an eye on that area. If we ever do get back up there, it's likely to keep offering resistance until it fails. All right, now the next part of the stream I want to turn to is the breakout. Okay, because I said you had some really good trading going on on the 8th of September. So we know we've got that key auction reversal, right? One of the things we deal with in terms of, strategies is not always about just executing the strategy. It's also about taking the information of what the strategy means. In other words, a key auction reversal doesn't just tell us that, the market's found some very aggressive sellers. It actually tells us that the market is likely to continue with the trend. And that's what we got on Thursday, the 6th of September. And this is this move here. Okay, so what I'm going to show you is what this looks like. In essence, what we were looking for was we had a breakdown of this. I don't even want to call it a trend line. I mean, I can put it in for you guys. But in essence, we had a little bit of a break of this, higher-low formation that was occurring. And we did get the break below the previous week's low. And that really ignited, we had 48 or 55,000 contracts traded in 5 minutes now. In half an hour. Now, if you don't think that's a lot, guys, it's a significant amount. It's a complete standout amount of volume, and that was the move that we were all playing for yesterday. It's not just necessarily the break below the trend line, but it's a continuation after we had that key auction reversal. Okay, and we can see we've got a nice move from 68.50 all the way down to 67, a good 150 tick move to the downside. Okay, now the important thing is not just to talk about it, all right? You've got to be aware of it. So a strategy is about, understanding the information, but then the real professional traders, the real solid traders, the real, what I like to call badass traders are the ones that ultimately have the timing perfected. Okay, and this is where the footprint chart is so extremely useful, because it helps you with that timing. It kind of gives you a hint as to when you should be ultimately engaging with the market. Okay, so what I want to do is I just want to get this back to the breakout, and we can take a look at that. Okay. So what we've got now, this is the 6th of September. It's around about 4 o'clock in the afternoon. It happened just after the EIA inventories data. And the key is just before we broke the daily low. Okay, and we discussed this again. This is in the footprint course. Every good breakout strategy always gives a signal. Okay, there's always a signal in the footprint that something is coming, an impending order is coming. And I'm going to show you what that looks like. Okay, so you can see nothing really going on in terms of volume. The data came out, we kind of went bid up, quite a bit of aggressive, move up, a little bit of volatility more than anything. Okay, no real movement. But then all of a sudden, okay, if you look, all of a sudden, going into the data, we were doing about 3,000 volume per 5-minute rotation. All of a sudden, the market comes down to the low of the day, and we get, a good 5,000 contracts traded between 47s and 51s. Okay, so the market came down, there was a little bit of absorption on the low. Okay, so someone was just absorbing the low of the day ultimately, but doing it in size. Now, it's fine to absorb the low of the day in size, but when it's done in size and the market still can't go bid, psychologically that's telling you what? It's telling you that, yes, there is a big buyer because he's taken 5,000 contracts, but there's an even bigger seller if it goes through him. Okay, think about that logic for a minute. Really big buyer of the low of the day, but the seller is selling even more than a really big buyer. Okay, and that's the real clue. When you have that sort of interaction taking place at key pinch points, that's telling you about an impending move, which is that these sellers have got even more ammunition to come. And that's what happened. Once we took those 48s, okay, you can notice the imbalance, 0.25, 0.6. Okay, so suddenly there was no more buying and the stops began. Okay, so we got a little bit of a flush lower first, and then the real move came. Okay, we dropped from 68.40 all the way down to 67.90 in 5 minutes. A good 50 tick move. Okay, through the previous week's low, obviously, as I mentioned. It then continued. We went from 68s down to 67.70, and we continued lower and lower and lower. Okay, a good 125 tick move in a space of 20 minutes. Okay, that was the breakout we were looking for with the clue. Now, if you like breakouts, you have to be using footprints, okay? They're going to give so many subtle clues as to when that breakout is about to occur. Now, what I want to talk about, and it's the last strategy I spoke about, is what we call an elephant. Again, the strategy is dealt with in a footprint course, but the low of the day, in essence, was an elephant. Now, if you're watching the CL ladder, which is the WTI oil, all right, I actually remarked to the guy in the office, look at the 400 lot orders on the bid in the oil. There was one at 67.00 and there's one at 66.95. Okay, market came down, took his 400 lots, but he reloaded for another 330. Okay, we call this an elephant. We call this an ice-berg order. We call this, effectively a buy order, which is where the market comes down, it trades the size, but there's more sitting behind it. An elephant. Once the market realized that elephant was there, we obviously had the sellers back off. Okay, the sellers gave up completely and the market suddenly did an outside candle off the low. Okay, now when you get an outside candle off any extreme point, that's telling you be cautious. Okay, we got to move from 67 to 67.25 off of that elephant, and the market then continued. All right, we then had a shallow pullback and the market rallied an entire $1. So 100 ticks, guys, the market rallied off of an elephant in the market. Now, what I'm not saying is whenever you see an elephant, you're going to get a 100 tick move. It's not that straightforward, okay? This was very much an outlier. It's a pattern I've added to the collection, but it's very rare to see that sort of a reaction. What I am saying is that the market had driven from the top of the day to the bottom almost 260 prices, right, which is very extreme. So the market was looking for a reason to bounce. If you were looking for a reason to be long, that was the only time to be long, was when the market told you that it was time to be long. There's a real key lesson there, guys, is that a lot of the time we would have just been trying to catch a falling knife and trying to buy it in random areas, random price levels. Rather, let the market, let the buying interaction tell you that they're buying it, and then buy it. Right? That way, you know where your stop is. Okay, your stop sits below this buyer now. Right? Equally, you know that you're not just taking unnecessary risk. You're allowing the market to tell you when to access it, in essence. And that's what makes the footprint tool powerful. It tells you when to buy and when to sell. Okay, it tells you this is the right time, this is the right time. That way you're not taking excessive risk. That way you're not sitting in trades for 6 hours hoping it'll go where it needs to. Okay, the real key to trading and being successful in futures is being able to leverage, and the only way you can leverage trades is by minimizing your risk. And the only way you minimize your risk is by buying and selling at the right times. Okay, so that is our key takeaway. If you do like any of these strategies, whether it's the key auction reversal, whether it's the breakout play with that signal I just showed you, whether it's the elephant, every one of the 10 strategies in the footprint course is covered in great detail. Okay, I'm just going to go back to that grid. We cover every one of these 10 strategies with video analysis, with 5 or 6 different charting examples. It gets explained in terms of why it works, how it works, where the risk is, where you're targeting. Every single one of these is explained in great depth in the footprint course. Okay, if you like the footprint tool, this is a massive investment, in your trading education. And again, like I said, this is my number one tool. It's helped me as a trader to become a lot more successful at the timing of my execution, but also confident in utilizing size at the right time.